Good morning, friends. Welcome to SBI Securities morning podcast. In today's podcast, we will be discussing about Nifty and Bank Nifty, the key levels for the indices, and what to expect from here on. We'll also be discussing on the key sectors and stocks that we should be focusing for the day and the next few trading sessions. First up, coming to the update in the global markets in trade yesterday. So yesterday the US markets, if we see, witnessed a mixed performance. The Dow has ended higher by nearly 1%, while the Nasdaq has slipped by 0.8%, and the S&P 500 ended at levels of 5,473 with a cut of 0.3% for the day. The S&P 500, if we see the zone of 5,450, 5,430 will act as the immediate support, while on the upside any sustainable move above the levels of 5,500 will lead to a sharp upside rally up to the mark of 5,580 followed by 5,650 levels. Coming to the update regarding the other key macroeconomic factors, so we had Brent crude which ended at $85 a barrel with a gain of 0.37%. Considering the current chart structure, it is likely to test the levels of 87.5 followed by 89 in the short term, while on the downside the zone of 83.80, 83.7 will act as the immediate support. Coming to the update regarding the dollar index, so the dollar index has formed a strong base near its 8-day EMA level and has witnessed a sharp upside rally on Thursday's trading session. It has ended at 105.65 with a gain of nearly 0.41%. Going ahead, it is likely to test the levels of 106.20 in the next couple of trading sessions. Now coming to the update regarding Nifty. So in trade yesterday, if we see, we had the weekly expiry. Nifty traded within the range of the previous candle, resulting in the formation of an inside bar like candlestick pattern. Additionally, the index closed near its opening price, forming a doji like candlestick. This combination of an inside bar and doji pattern suggests indecision at higher levels. This marked the 8th consecutive trading session where such indecisive candles have appeared, highlighting the persistent uncertainty in the market. Going ahead, if we see for the day, the support has shifted higher in the zone of 23,500, 23,470 levels. As long as it is trading about 23,470, it is likely to test the levels of 23,750 in the medium term, followed by the levels of 24,000. While on the downside, if we see any sustainable move above the below the levels of 23,470, it would lead to profit booking in the index up to the levels of 23,350, followed by 23,270 levels. On the derivative front, if we see the June futures has ended higher by 0.34%, and the cumulative open interest of the current, next and far series has surged by nearly 3.4%, which indicates minor long built up. Among the constituents of the Nifty index, we had 14 stocks which witnessed long built up, 14 stocks have witnessed short covering rally, while 15 stocks witnessed short built up, and we have 7 stocks which witnessed long unwinding. For the June expiry, the PCR is at 1.17 and the max pain is at 23,400. If we look at the option chain data, we have 23,600 which has significant call open interest, followed by 23,800, and on the put side it is seen in 23,500 followed by 23,400 strike. Now coming to the update regarding Bank Nifty, so the banking index has continued its outperformance for the third consecutive trading session. It has ended near 51,800 with a gain of nearly 0.75% for the day. On the daily scale, if we see, it has formed a small body bullish candle with long lower shadow. The long lower shadow indicates market participants are adopting a buy on dip strategy in the banking space. The daily RSI is in super bullish zone as per the RSI range shift rules. The daily MACD stays bullish as it is quoting above its zero line and signal line. The MACD histogram is suggesting a pickup in the upside momentum. Going ahead, Bank Nifty is likely to continue its upward journey and test the levels of 52,500 in the short term, while on the downside support has shifted higher in the zone of 51,500, 51,400 levels. On the derivative front, if we see, the June futures has surged by nearly 0.78%, and the cumulative open interest of the current, next and far series has dipped by 0.38%, which indicates overall short covering. Now coming to the option chain regarding Bank Nifty. So currently if we see 52,000 strike has significant call open interest followed by 52,500 strike, and on the put side it is majorly seen in 51,500 followed by 51,000 strike. If we see for the June series for Bank Nifty, that is the put call ratio, it currently stands at 1.10 and the max pain is at 51,400 strike. Now coming to the key market indicators, so we have the volatility index India VIX, which has ended at 13.34 level with a loss of 2.68%. Going ahead for India VIX, the zone of 11.7 11.6 will be the crucial support for the index, while the zone of 14.10 14.2 will act as the immediate resistance. The overall advance decline ratio tilted in favor of the advancing counters. Coming to the key sectors in momentum, so we had Nifty Bank, Nifty Private Bank, Nifty Financial Services. These are the sectors which are in traction currently, and these are the sectors that we believe are going to outperform in the next couple of trading sessions. Chemical sector, if we see, we experience strong bullish momentum, significant trading volume in trade yesterday. We anticipate this outperformance will continue in the next few trading sessions as well. Apart from this, we had Nifty Realty and Nifty Metals, which are likely to continue their upward journey. Now coming to the FI DI data, so FI is bought to the tune of 415 crores while DI is sold to the tune of 325 crores. FI long short ratio for index futures is at 56.74 on a net basis. This as they purchased about 28,406 index futures. On the stock futures front, FIs have sold to the tune of 46,212 contracts, while on the options front, FIs sold 2,18,755 call contracts and they simultaneously sold 2,84,830 put option contracts. So friends, that's all for today. Thank you for regularly listening to our podcast and wishing you all an energetic day ahead. Thank you.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.